Welcome back to the channel, everyone. Today I want to talk about how cash is going to settle after the MOASS, how we can withdraw our cash, what kind of problems we might experience, and what's going to happen if these brokers have liquidity issues or go bankrupt. I also want to talk about the 2022 market crash that's been predicted by a Harvard MBA. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, just a reminder about withdrawing your cash after the mother of all short squeezes. So this should be common knowledge to most people who have withdrawn cash from their broker accounts before, but since a lot of apes are new to trading, I figured I'd make this post. After you sell during the mother of all short squeezes, you won't be able to withdraw your cash right away because the cash will be unsettled. It will take 2 to 3 days, maybe even longer. I actually think it would take a few weeks for the trade to be settled and for the money to transfer to your account. So typically when you sell your stock in your brokerage account within 2 days, because of the T+2 timing, the broker will take that stock and sell it into the market. They'll then credit your account with the cash and the cash will settle maybe next business day. So usually 2 to 3 days for cash to settle. But obviously when the MOASS happens, it's not going to be as simple as your broker taking those shares and selling them into the market. A lot of these hedge funds and institutions are going to get liquidated, and it will be that liquidation cash that goes to buy your shares, and ultimately that liquidation cash that goes to the broker. Now, as I've spoken about on the channel yesterday and a number of times before, a liquidation isn't an instantaneous process. It doesn't take 30 seconds, it doesn't take 2 minutes, it doesn't take half an hour. It can take multiple days and maybe even a few weeks, especially if it's a very large hedge fund or institution that's being liquidated. Now, for example, we've seen from Citadel's 13F filings that they have pages and pages and pages of stocks and positions. All of these stocks and positions will need to be closed and the shorts will need to be covered. Again, it's not an instantaneous process. And on top of that, all of the synthetic shorts will have to be unwound as well. And again, that's not an instantaneous process either. And therefore, it may take even 2 to 3 weeks for the cash to settle into your brokerage account. But they will likely allow you to trade with that money though while you wait for it to settle, but that doesn't mean you have the money in your bank account just yet. Although once it's settled, you can transfer it out to your bank account either through ACH or through a wire transfer. An ACH is what you'd likely use to transfer money to your broker in the first place, but there are limits on how much one ACH transfer can be for. A TD Ameritrade rep told me that the limit is $250,000, but you can make multiple $250,000 ACH transfers per day, and you don't have to wait for one to process before you send the next. Although a little bit lower, he does also say that the $250,000 limit is a daily limit, not just a transaction limit. And an ACH transfer will usually take 3 to 4 business days before it's available to spend in your bank account. Now, on the other hand, a wire transfer has no limit and is processed usually within 24 hours, but it does have a small fee. And if you send it to the wrong place, it's usually not reversible. So if you've never used a wire transfer before, I'd test it out before the mother of all short squeezes, or after the MOASS, maybe start by sending a small amount first as a test. Also guys, Moomoo are currently giving away an iPhone 13 Pro every single day this month until Christmas. On top of that, they're also giving away a number of other goodies, and as usual, they're 5 free stocks valued up to $3,500. To get a free iPhone 13 Pro and many other goodies, all you have to do is sign up to Moomoo and deposit $100 and check back every single day because you could have won. And to get those 5 free stocks worth up to $17,500 in total, you get your first free stock by opening a Moomoo account. You get your second free stock by making your first deposit of any amount, even if it's only $1. And you get the final 3 remaining free shares for depositing $2,000. Moomoo is also a brilliant investing platform with free real-time level 2 market data. They've got advanced charting tools. They've got 24/7 real-time financial news so that you don't miss an important headline, and a global investment community so that you can get some new stock ideas. Now, I think on top of that, we've also got to consider what happens if these brokers have liquidity issues, similarly to what Robinhood experienced back in January. Obviously, back in January, Robinhood had a lot of new customers, they had a lot of new transactions, and because of the T+2 timing deadline, many people were buying GameStop stock for $40 per share, but then 2 days later, Robinhood were having to go into the market and buy at $200, $300 or $400 per share. Now, this obviously caused them a lot of liquidity issues, and the DTCC issued them a $2 billion margin call. Obviously, Robinhood didn't have $2 billion. Yes, they did some shady stuff and managed to get that margin call down to around 750 million, which they did manage to pay. But what happens if your broker doesn't get this same sketchy deal and doesn't turn off a buy button and can't afford to pay that margin call? Well, additional margin calls are designed to cover possible losses to the clearing agency and protect the industry in the event of a participant default. So therefore, if the broker can't meet that margin call from the DTCC, they will enter what's called a participant default. And while a participant default does occur from time to time, neither the NSCC, nor the FICC, nor the DTCC have experienced a financial loss following a default that was not covered by its financial resources. So therefore, even though these brokers have the cash, because obviously they may fail to meet the margin call, they will be declared a participant default. But because they do have the cash and the assets in their account, they can usually settle all of the claims and all of that bankruptcy process without losing anyone's money. But obviously what happens if the broker doesn't have the money and has to enter a formal bankruptcy process? Well, that's obviously where the SIPC get involved, and you have that $500,000 SIPC insurance per trading account. And therefore, if your broker goes bankrupt, don't worry, because the system is set up so that you're protected and another entity will take over their orders. Obviously, the problem being, what happens if post-MOASS I have more than $500,000 in my account, which is very, very possible and potentially very, very probable depending on how many AMC shares you have. But this is where other entities come in and take over their orders. Obviously, the remaining participants of the DTCC then get all of those customer accounts and effectively take over the broker platform and obviously just continue operating it like it should be. And ultimately, this new entity will take over and they will sell your AMC shares into the market and settle the cash into your account. But again, as I said, this isn't an instantaneous process. It may take a few days, maybe even a couple of weeks for that new entity to take over all of those transactions. And the poster says there will be a delay, but it shouldn't be more than a week. Again, I think it'll be more like 2 to 3 weeks, but I don't think it's going to be something that goes on forever. According to the SIPC, during 2008, the longest anyone had to wait to get their money from Bear Stearns going under was 1 week. Now, I do obviously think this is a very different situation. People are going to be making a lot of money in this process during the AMC squeeze, and it's going to be a lot of people as well. It's not just going to be the few investors that were investing into Bear Stearns who lost most of their money. In fact, it's quite the opposite. It's a lot of people and they're making a lot of money, not losing a lot of money. Therefore, I think it could take a few weeks to settle. Now, I also want to go over some recent Ortex data because I found something very, very interesting that the hedges have been doing over the last few weeks. Obviously, over the last few weeks, the price of AMC has been falling. It fell from around $46 to around $25, $26. A lot of you may be saying, well, Tom, those hedgies that shorted AMC at $55, at $60, at $70, surely covered their shorts around that $25 mark, right? Well, actually, Ortex shows that the estimated short interest has been increasing significantly over the last 2 weeks. Therefore, the hedgies have actually been shorting more shares and adding to their short positions. Now, I know in my video that I said yesterday that the hedgies haven't been adding to their short positions because they don't have any more cash for it. I do think that's true. I think what's going on at the moment and what's been happening over the last 2 weeks is rehypothecation of the same shares, because obviously the same one share can be shorted many, many times over. I also think that in the last 2 weeks, a lot of these same shares have been passed back and forth between different hedge funds, effectively creating that ladder attack. And most probably, both of these hedge funds are recognizing these shares or these shorted shares on their books because of the rehypothecation. So therefore, ultimately, they're not shorting new shares or creating new synthetics. They're just reshorting the same shares, and that's increased that estimated short interest. But I find it interesting and very, very silly for those hedge funds that AMC's fallen from around $72 all the way down now to $25, and it took out those previous lows around $28, and instead of finally covering those shorts, they've actually continued to add to their short positions or reshort the same shares. Now, I also wanted to talk about the Wyckoff accumulation and how AMC is trading in the current pattern. Obviously, on the Ortex chart, I showed you that AMC recently took out the previous lows. The previous lows were around $28, and AMC recently fell to around $26. This is obviously shown in that phase B of the Wyckoff pattern, where it dips below the previous lows. Shorts were very silly here and actually added to their short positions instead of covering their short positions. But now AMC is continuing out of that pattern and moving upwards. You can obviously see AMC taking out those previous lows, and over the last few days it's rebounded back upwards to that $34 region of resistance. When we break through that $34 resistance area and head back towards the $40 resistance, those shorts that added to their short positions at the $25 region are going to be in very, very hot water. Now, I also wanted to talk about Citadel suppressing their critics with legal action. We know recently that Citadel had a bit of a meltdown on Twitter, and now it seems like they're trying to continue to take the legal route. Previously, Citadel tried to issue legal action against Kat Stryker and her advertising efforts, but now, evidently unsatisfied with his billions, Citadel's CEO Ken Griffin has won an arbitration case against a parody website. Investment firm Citadel has won a cyber squatting dispute it brought against the owner of CitadelAir.com. The domain owner operated a Twitter account called Citadel Air, which has since been suspended, where he parodies the investment firm and promotes the short selling of meme stocks such as GameStop and AMC. It strikes me how thin-skinned Citadel really is. Someone makes a website to goof on your multi-billion-dollar hedge fund, and your response is legal action. We saw similar unhinged behaviour from Citadel when it likened its critics to deniers of the moon landing or conspiracy theorists. This is not the behaviour of a well-managed company. If Citadel is so sensitive, perhaps it means they're hiding something, and secrets have a way of coming out. I personally think this is so true. Citadel wouldn't be getting so defensive on Twitter, trying to sue Kat Stryker, now trying to sue parody Twitter accounts if they didn't have anything to hide. Now, I also wanted to recap on the overall ape movement as well. Matt Kohrs recently tweeted saying, "I know mainstream media has stated it multiple times. They will lose interest and they will go away," referring to us apes, thinking that we'll lose interest and just stop bothering with AMC and GameStop. But did anyone think we were going to forget about egregious market abuse? We are here to stay. I personally do think that the AMC and ape movement will carry on until AMC squeezes and until there's more regulation and a more fair market. And I know that the AMC and ape movement is here to stay, as AMC was the second highest in the top 10 news stories searched on Google in the US in 2021. AMC was searched more times than the stimulus check, more times than Dogecoin, more times than GameStop, more times than anything else on this list. And still to this day, AMC is still one of the most heavily searched stocks on the entire of the internet. And this means that us apes are not only here to stay, but we will stay until we get what we want and until we get what's right. Now, on top of this, Harry Dent says the stock market crash is coming in early 2022 and says the economy is dead. He also thinks that crypto is going to drop even more than stocks because of how heavily involved the mainstream institutions and hedge funds are in crypto now. Back in 2018, 2017, 2014 and before, this was very different, as everybody that invested in Bitcoin and cryptocurrency was retail investors. But there's been so much adoption by the mainstream institutions, the mainstream hedge funds and banks, that crypto is basically entirely controlled by those mainstream institutions now. He also forecasts that the economy isn't going to get strong again until 2024 and will have the biggest recession or depression of our lives. He also says that additional stimulus won't help. Enough is more than enough. And this can be seen very prevalently in the market right now. Inflation is runaway, the S&P 500 is going absolutely crazy, setting new all-time highs, and the Shiller P ratio is off the charts. He says that stocks are on their last legs and predicts that the market will plummet by 80%, and believes in the first 2 or 3 months of 2022 it will drop by more than 50%. And Harry Dent is a Harvard Business School MBA. And his research suggests that around 21% of companies are barely limping along and are doomed to fail in the recession he sees coming. Now, if you look at the Property Developers Index in China, you can see an absolute massacre. Fantasia have been delisted, Modern Land is suspended, Cynic is suspended as well, and pretty much every single developer is down massively, not only today or yesterday, but down massively over the last few months. Obviously, as I've reported, this is because many Chinese property developers are defaulting and going bankrupt pretty much on a daily basis, it seems at this point. Guys, be sure to let me know down in the comments below what you think about withdrawing cash after the MOASS. Do you think it's going to be difficult, or do you think there's going to be no problems? And guys, if you want to stay up to date with my latest stock and crypto picks, or if you just want some help with AMC and GameStop, be sure to check out the Patreon and the private Discord, linked in the description below, and become part of the team. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.